Here's the thing. Everybody assumes that the reason why they're not wealthy or they can't become wealthy is because of what tool set that they have, what resources they have access to, where they come from, their background, their salary, when in reality, for 95%, maybe even more than 95% of people, but I'm being generous by saying 95%. For 95% of people, it's not the tool set that's holding you back, it's your mindset. Because you have to be wealthy here in your mind before you can be wealthy in your bank account. And this one aspect, this one thing, this one piece of advice that I can tell you is so far overlooked and so misunderstood that nobody wants to believe it. People will complain all day long about how times have changed. Not in this economic market, not in this world, not in this cycle, not in this whatever, because of everything else going on in the world, right? The system is screwing us over. The tax code is screwing us over. Corporations are screwing us over. Banks are screwing us over. The government is screwing us over. All these things, I call them the external impact, are the reason why we can't become successful. It's the reason why we can't become wealthy. It's the reason why we can't escape the rat race, when in reality, that's not the only thing. You're right. I made a video about this a couple of weeks ago, but the system is designed to keep people poor. It profits when people are financially uneducated, and it profits when people are financially poor. It's reality. Banks make more money when you're poor because all your money is going out. You're buying more things using the bank's money, and they're going to keep leeching off of you for the rest of your life. Banks love it. Corporations love it because they can keep selling you things day after day after day without you asking questions of, do I need it? Should I buy it? Can I afford it? They don't want you asking these questions. The tax code is designed to benefit business owners. It's designed to benefit investors. I mean, you can make whatever justifications you want, but it's reality. The system is built this way. And this is where everyone starts kicking, screaming, and crying and saying, this is why I can't become wealthy. But now, if you start to shift the script a little bit, and we start to shift our mindset a little bit, you can understand that these external things don't have to be the determining factor of how you live your life and where you go in your life financially. Because the reality is you have a lot more control over your life and your finances than most people think. And it starts with the mindset shift. Because now let's start with the tax aspect. The tax code benefits business owners and investors more than anyone else. Fact. I'm an attorney. I can tell you this as a fact. I'm also working on building a tax firm. This is fact. But what's also fact is you can start investing with $1. There are so many apps out there that make investing so much more accessible, so much easier, so much simpler than ever before. This isn't like 1930 where you needed access to a lot of money, a good financial advisor, and then access to a stock trader to actually be able to invest your money. If you have a phone, or even if you don't have a phone, if you have access to the internet, whether it's through a library or your own computer or your phone, you can start investing your money with as little as $1. That is how simple it has become. Not easy, but how simple and accessible it has become. So now you can start taking advantage of the investment tax deductions. Now you might say, well, if I was a millionaire, I'd be able to deduct more things. Sure, on a dollar-to-dollar basis. But the investment deductions that you can get with $1 investment is the same as someone with $1 million. Now you get access to more things, the more money you have, the more investments you have, the more businesses you have. But just because you are investing with $1 doesn't mean you don't get access to any of those deductions, because investment profits are taxed lower than your profits and income from a job. It's the reality. Same with business owners. Starting a business today can be done with a few $100s. And when you open up an LLC, if you start a side hustle, well, now you can start accessing some of the other tax deductions that business owners get, because now you have a side hustle. Now, of course, you want to do this legally. You want to have a good tax advisor there, but these options are there. Thanks to YouTube, you can learn how to do this for free, and then you can start implementing these things. Now let's talk about corporations. Corporations are greedy. They keep selling me things. You're right, but they're not the ones that are forcing you to buy. right? No corporation. Walmart doesn't put a gun to your head and say, go buy this t-shirt or go buy this TV. What they do, they are in the business of trying to get you to buy it, right? Walmart is going to put up billboards. They're going to put up signs. They're going to put up advertisements. They're going to make the best marketing possible. They're going to hire great marketing experts, people who went to school, to get you to buy things from them. Every business in the world does this. It's reality. They are in the business of getting you to buy something. But it requires two people. It takes two people to tango. It takes two people because now they're trying to sell you something, then you have to actually make the decision to buy it. And Walmart is not really caring about your financial situation. They just want you to buy their TV or their shirt, even if that means you got to go into debt. And you can say, but that's evil, that's mean. Listen, we can get caught up in our feelings, or we can understand that sometimes these things happen. Like there are things in the world that are there, like gravity. It is there. Now, with gravity, you have two options. You can get very upset that you can't dunk because gravity is holding you down. I wish I could dunk. This stupid gravity keeps pushing me down. Or you can say, gravity exists. I'm not going to get mad at gravity. And if I really want to dunk, I'm going to go and, practice my squats. I'm going to practice my jumps. I'm going to go get a coach. Like, do whatever I got to do to be able to fight gravity and be able to jump higher, right? That's how gravity works. Corporations are in the business of selling stuff. It's reality, okay? Walmart wants you to buy their stuff. Amazon wants you to buy their stuff. Apple wants you to buy their stuff. Lululemon wants you to buy their stuff. Gucci wants you to buy their stuff. If corporations were not selling their stuff, you wouldn't have a job, right? Like if your business, every business is in the business of selling something. And if your business was not making any money, you're not going to have a job anymore. So now it's understanding, okay, corporations want to sell things, but I don't have to actually buy it unless I want it. And now this is where things become very unique or interesting, because when you can't afford a TV and Walmart entices you to buy a TV, now you feel very upset. They forced me to buy this TV that I didn't need. These greedy corporations keep selling stuff. Or on the flip side, you can afford that TV. You've budgeted, you put the cash aside, you know how big of a TV that you can buy, and then you go and buy the TV without worrying about the price because you can afford it. Now it's a very different situation. Walmart didn't force you to buy that TV. You made the smart decision of buying the TV that you can afford when you were ready to buy it. Now it's, hey, look at this beautiful TV that I have. It's a very different dynamic. So now understanding, corporations are in the business of selling stuff. You can call it evil. You can call it not evil. It just is what it is. Now let's talk about banks. Banks are in the business of lending money. That is what they do. They don't want you to ask questions. Well, why do you think banks don't teach financial education? Because if they taught financial education, people wouldn't be going into debt to buy Gucci. You'd have less people going into debt to buy a car. You wouldn't have people going into debt to go on a vacation. So banks are not interested in selling that financial education because they want to sell you a loan. They rather sell you a loan than sell you financial education. But that's the reason why I'm broke, is because I have so much debt. Now look, it takes two people to tango, okay? Banks want you in debt. It's a fact. They profit when you are in debt. They don't care what you're in debt for. They just want you to keep borrowing money from the bank, period. Now that we understand that, we understand gravity is there. Banks want you to borrow money. This is where now you have to get financially educated and understand, when is it a good time for you to actually borrow money from the bank? See, wealthy people don't go to the bank to borrow money to buy Gucci. They go to the bank to borrow money to buy an investment. They go to the bank to borrow money to buy a business. They go to the bank to borrow money to buy something that's going to make them money, because now this asset that they're buying, with the help of the bank in this case, is making them money. And it's paying off their mortgage for them, and it's putting money in their pocket. So if I go to the bank and I borrow $1 million, that thing that I'm going to buy with this $1 million is going to pay off my mortgage and put an extra $100,000 in my pocket. That's one way to use a bank. The other way to use a bank is, I'm going to borrow $100,000 from the bank to buy a car that I can't afford. And then I'm going to pay interest on this car. And then I'm going to be able to sell this car for $60,000. You didn't make any money. You got no cash flow. The value of your car went down, and all you did was pay interest to the bank. It's a very different mindset. So this is where now understanding the banking system is there to get you to borrow money. fact. Now that we understand that, how then can you potentially use it to your advantage? So how do you now become wealthy? Well, first is understanding how the system works and then believing that you can do it. Because there's two aspects of believing. One is now understanding this external aspect and the internal aspect, but then also understanding that it's possible for you no matter where you come from. Because then the next thing is, this might have worked 30 years ago, Jaspreet, it doesn't work today. This might have worked 10 years ago, Jaspreet, it doesn't work today. And that's false. This works across any time, across borders. I mean, look, if you're in the United States, you're in a first world developed country, you can speak English, you understand what I'm saying, this works. In some parts of the world, you're right, it doesn't work. There are other parts of the world where you don't have these types of opportunities. Try going to a third world country and trying to build something there where the government owns and controls everything, because if you try to build something, they will take it away from you or they will kill you because you're doing something out of line. Mm-hmm. It's different. So if you are here, you have that opportunity. You can do it. So now you're starting to build that mindset, and now you're starting to do it. But then you also have to stop counting what other people are doing, because now instead of focusing on you, the next big factor, so we're going big down, right? So it was this whole external thing, blaming that. Now we're looking at ourselves. Now we're blaming the economic system. Now if we move a little bit deeper, now it's everybody else who did it, did something bad, did something sketchy, did something illegal. I don't want to be a part of that system. And we start to assume that, this wealth was evilly created. And I understand that, because that was kind of the mindset that I had before too, where you assume that if somebody has money, that they must have done something bad to get it. Mm-hmm. When in reality, that is the case for some people, but not everyone. A lot of people earned wealth through hard work, through understanding the system, and through putting in those reps day in and day out. There are fraudsters out there. There are scammers out there. There are bad people out there. There are bad people out there who are rich, who are wealthy, and there's also bad people out there who are poor. Okay, so let's understand that. It's not a matter of income, it's just a matter of bad people. There are people with morals who are poor, and there are people with morals who are rich. And so you can have morals, be a good person, and be wealthy at the same time. They're not mutually exclusive. And then we start counting other people's dollars. Oh, this person has this much money, or this person has that, and this person has that. And now you get obsessed with what other people are doing instead of focusing in on you. And this is very toxic, because now what you're doing is you're spending your time, effort, and energy looking at everything else around you, trying to figure out what they did, why they did it, how it's bad, and you're hating on them as opposed to just focusing in on you. Instead of trying to count other people's dollars, focus on counting your own and see how you can grow yourself. Because when you're constantly worried and watching what other people are doing, you become paranoid, but not about you, not about the things that you're doing and the things that you're achieving. You're paranoid about what other people are doing. How is that going to make you any better? How is you watching random people on the internet going to make you more successful?
Right.
And this is where now you have to get more paranoid about yourself, your own bank account, and now start to be a little bit more accountable for you. What does that mean? Well, accountability. Okay, let's talk about accountability, because this is a very fun topic. Because this is where I like to say you can't speak out of both sides of your mouth. If you say you want to be wealthy, because you don't have to be wealthy, right? This is now choice. Like, it's a free country. If you don't want to put in the work, if you don't want to be rich, you don't want to be wealthy, that's fine. You don't have to be. Like, you can live in debt. You can have all the nice stuff today, go into credit card debt, buy all the Gucci, Louis Vuitton you want, and go into debt. Like, that is your choice. But if you say, you know what, I want to be wealthy, I don't want to have to worry about the price of things, I want to be financially free, fine. So now, if you say that, I want to be financially free, I want to be wealthy, I want to have the nice stuff, I want to have money, I don't want to have to stress about money, great. But at the same time, today, you have no investments, you have no savings, but you have the Gucci, you have the Louis Vuitton, and or you have a Beamer, you're doing something wrong, right? You're speaking out of both sides of your mouth, because you say, here, I want to be wealthy. I want to have the nice stuff. I want to be financially free, but at the same time, you're spending your money in a way that's going to prevent you from being financially free.
Right.
This is where you have to have an honest talk with yourself. Look in the mirror and say, what do you actually want? Do you want the nice stuff today and be broke? Or do you want to make the sacrifices today that we can actually become wealthy and have the nice stuff sometime in the future? And this is where things get hard, because it's a time game where we want the nice stuff today. You don't want to wait till your 40s or 50s or 60s to have nice stuff. I want to have it when I'm 25. I want to have it when I'm 28. I want to have it when I'm 33. And this is where, if that's what you want the nice stuff when you're younger, understand the wealth formula. I created this thing as a very simple formula. Your income minus your expenses equal your investments plus your savings. Your savings, if you go backwards, your savings are not there to make you wealthy. Your savings are there as protection, to protect you from any sort of financial disaster or financial stress. So your savings are there not to make you rich, not to make you wealthy, but to protect you. Your investments are there to make you wealthy. If you want to become wealthier, increase your investments. Simple as that. Now, how do you put more money towards your investments? Income minus expenses. Most people focus on the expense part. So I have X number of dollars coming in as my income. I have this as my expenses. So if I want more money from my investments, I have to decrease my expenses. And that is a great place to start, but it doesn't have to be where you start, because now you have to ask the question of how aggressive do you want to be and when? Because if you say, I want to be wealthy in 5 years, all right, well, you better start cutting those expenses and start increasing that income. It's a formula, right? Income minus expenses equal your investments plus your savings. Once you build your savings, you don't need any more savings. You just focus on the investments. How do you put more money towards your investments? Because this is the reality. This is what wealthy people do to become wealthy, and this is what wealthy people do to stay wealthy. They put more money towards their investments. Simple as that. And now we can dive into what are the different investments, but that formula is the core. More money has to go towards investments. Mm-hmm. Now you can decrease the expenses or you can increase the income. And this is where now the more aggressive that you want to be, the faster you want to see it, the bigger you want to go, the more your income has to go up. Because in the beginning, when people try to become wealthy, everyone says, I just need more money. I just need a bigger salary. I just need this. I just need more of that. But what happens to those people without the financial education? You make more money and your expenses magically go up. Now you have no more money for your savings, no more money for your investments. Your expenses rise with the income. Your lifestyle inflates with your income. And that's what's keeping you from becoming wealthy. And this is where you have to break out of that and now understand the system. And it all starts with your mindset. And I can't emphasize this enough. You can't be a hater and expect to become wealthy. Like, if you're trying to pull somebody else down, you are never going to, you can't go further than your hate. And I don't know how to emphasize that anymore, but you have to become wealthy in your mindset before you can become wealthy in your bank account. And you can believe me or not, but it is a 100% fact. And you might win the lottery and win some money, be a hater, but then the money's going to go right away. Because that mindset is so important. It's so crucial to building any sort of wealth, where if you're constantly hating on others, you're hating what other people are doing, you're hating what other people are getting, you're going to have a very hard time getting it for yourself.
So in addition to the mindset, is there something else people need in order to kind of build that sort of whole life, like wealth experience? Or because you mentioned it's not just about money, is there other things that you need in addition to that?
Yeah, I mean, if you want to live a happy and fulfilled life, this is where understanding how money plays a part in your life is one of the most important things. And this is where I talk about my quadruped triangle, because money is just one aspect of your life. There are 4 aspects, I call it quadruped triangle, to living a happy and fulfilled life. And you have to be happy and fulfilled in this order if you want to live a fulfilled life. At the bottom, which is number 1 now, is your physical fitness. If you are morbidly obese, you're on your deathbed, more money is not going to make you happy. It's not going to do anything, because all you want is to be healthy again. When you're not healthy, when you're down physically, like the only thing you care about is being healthy again. Like there's nothing else on your mind. Like we all know that feeling of being sick. When you're really sick, you just want to be healthy again. That way you can walk and talk and do things. Like nothing else matters. It is like that first primal instinct. Once you are physically fit, that's when you want to be mentally fit. Mentally fit now is working on your mental health. If you're anxious, if you're depressed, if you're not surrounded by people you love, if you're miserable, if you're unhappy, More money is going to make you more miserable. And this is where, just being able to understand that if you are unhappy, it's not because of your money. It's because of something else. And this is where now understanding why are you unhappy in your life. Now, of course, money can impact your mental health. If you don't have money, you can be very stressed. You can become depressed. It's one of the leading causes of suicide and divorce. However, you have to be able to separate those two and understand, are you okay with yourself and your life? And being able to tackle and take care of your mental health. Because if you're not mentally okay, you need to get a therapist, go into rehab, go do whatever it takes, whatever the price is, because no matter how much money you make, it's not going to impact your mental health. Then you have the spiritual aspect of your life. Now, this doesn't have to be religious. This is more about your purpose. What are you getting up for every single day? Why are you on this earth? Why are you working so hard? What do you want to work for? And this is so important because if you do become financially successful, you become financially free, and you don't have a purpose, then you're going to have no reason to get out of bed. You're going to feel hopeless and helpless because you made the money that you wanted, but you have no reason to get up anymore. You got up every day to make money, but that's it now. And so it's understanding what is your bigger purpose, what is your bigger calling. That is the spiritual aspect of your life. And then at the top, you have financial fitness. This is now where more money has the biggest impact and the most power, because money now allows you to do more of the things that you love, to do more of the things that make you feel fulfilled, to do more of the things that make you feel happy. Because now you can take care of your spouse better, you can take care of your kids better, you can take care of your family better, you can take care of your community better, you can take care of yourself better. And this is where you have to understand how money plays a part in your life, because when you have money without the other aspects of life, it doesn't give you a very wholesome feeling. You have money, but it's just money. It's just pieces of paper. But when you have everything, now more money can allow you to live a much better life. But then if you don't have money, now this can impact every other aspect of your life. If you don't have money, you're struggling with your bills, then you can't eat healthy, you can't get a good therapist, you're going to start stress eating, you start doing all these things that are bad for your physical health, bad for your mental health, bad for your spiritual health. And so you have to understand now how money plays a part in your life. And yes, money is not everything. But, this channel, the Minority Mindset channel, I focus on the financial aspect because it's the part that I understand. But what I don't want you to get confused is that money is not the only aspect. There are other people who are way smarter than I am on how to have a better diet, how to take better care of your physical health. Like, I try to take care of my physical health. I try to exercise. I don't talk about it too much on this channel, but there are people out there that have devoted their life to talking about how to have a good physical health. Then same thing in the mental health. Like, we talk about it here, I mention it, but I am not an expert at mental health. There are other people who are way smarter than I am that you can learn from, how to be happy, how to be more fulfilled there. Same with spiritual health, how to live your purpose, how to have that fulfillment. I mention it, I talk about it, but again, there are people that are way smarter than I am in that niche. And then we have the financial health. This is where I have the most experience, the most, I feel like, expertise. And this is where I talk about, but understanding now how money plays this holistic part. But if you want to become wealthy financially, you focus on the financial part. But being wealthy financially is not going to fix everything else. So being able to understand each one of these, and they all kind of work together, because then once you start to feel more fulfilled and you start to do more things because of the purpose and the impact rather than just chasing money, more money follows. And it's one of those things where it's not just about chasing money. The more you chase money, the less money you get, which is kind of ironic. When you're chasing the impact and you're chasing the purpose, you don't see the money right in the beginning. But it allows you to put in more work. It allows you to put in more time. It allows you to care more about the craft. It allows you to do a whole lot more than you would have if you just wanted the immediate return. And that long-term nurturing, the care of whatever it is that you're doing, whether it's building a business, building your craft, building your career, it's going to allow you to earn way more dollars in the future because you're working to build something and you're willing to put in that work because you care about what you do.
Yeah, I think in today's society, people get really kind of caught up on like this tangible versus intangible, right? Because like when you spend your money for, like you said before, like a new car, that's like tangible because I can have that today. But wealth is like kind of something that doesn't seem like you can grab it, right? Like time and the amount that you put in today. People would rather have that money spent today, right? Rather than to put $1 in and not see it for a long time.
It's that get rich quick mindset. And because, I mean, if you look at the numbers, if you start investing $100 a month when you're 21 years old, just $100 a month, and you never change how much money you invest. So every month, from the day you turn 21, you invest $100 until you turn 66, and you never change that. And you can get an average stock market return. You get an average 10% return on your money. That doesn't mean it's a 10% return every year, but over the long term, you get a 10% return, which is what the historical return has been. You will retire a millionaire. It's a fact. Run it on a compound interest calculator. Now, if you did that, but then as you earn more money, you started to invest a little bit more. Maybe you start to go to $125 a month, $150, $175, $200 a month. Now you can really start to compound. Then you can turn that $1 million into $1.5 million, $2 million, depending on how aggressively that you can invest. But it just requires that time and the discipline and the patience. But it's hard because that's not loud, it's not showy, it's not attractive. It's the same reason why, Wall Street bets traders have been so popular, is because it's so attractive, right? You can talk about this meme stock that you bought and you doubled your money in 60 days. That's hot and that's attractive, but it also comes with the most risk. And what we've seen, history tells us this, is that over the long run, over the course of a number of years, the traders lose. The investors win. I don't advocate trading. I'm not a good trader. I tried trading back when I was in college, and it was a big life suck. It was a big time suck, and it was a big money suck. So it sucked. I'm not a good trader. So I don't talk about trading because I don't know how. I can't make money as a trader. It's too emotional. It's too chaotic. It's too time draining. Investing isn't as attractive. It's not as fun. It's not as, oh my God, this is happening. It's just you keep putting your money in and you do this week after week, month after month, year after year, and it's slowly watching your money compound and grow. The numbers are there. It'll show you that it's very possible, but it requires the discipline of understanding what it takes to get there. Now you're going to say, well, I don't want to wait 45 years. Is there anything else? Yes. Go back to the wealth formula. Income minus expenses equal your investments plus your savings. Your investments are going to make you wealthy. I just talked about the $100 a month. That will get you to $1 million. You want to get there quicker? Fine. You need more dollars going to your investments. How do you put more dollars towards your investments? Income minus expenses. You decrease your expenses more, you increase your income more. That's how you get there. How do you decrease your expenses? Well, you stop living a financed life. You live smaller. How do you increase your income? You add more income. Maybe it's at your job. Maybe you start a side hustle. Maybe you start a business. And this is where just understanding your lifestyle and your risk and make sure it's aligning with your goals. If you say, I want to have it all, I want to be worth $100 million, but you're not willing to take on any risk, you're going to have a hard time getting there.
I hear this ideology a lot, and I want to hear your thoughts on it because people are saying now that they're really scared of things like inflation. So they're going to invest for, 30, 45 years, something like that, and they're going to end up with $1 million, but that $1 million is not going to be worth $1 million anymore, and they're not going to be able to retire on it. So their argument is, why even bother? What are your thoughts on that?
Well, the idea of why even bother doesn't make any sense because let's just assume worst case scenario. You invest your money, you're hoping to make $1 million, but the $1 million might not be worth as much. And what if you don't get the best returns? So you invest your money and you don't make $1 million, you don't make $750,000, you make $500,000. And the $500,000 can't buy you as much that it could today because of inflation. The alternative to you having the $500,000 is you have nothing.
Right.
So $500,000 is better than nothing, which will put you in a much better situation than the other. So that's worst case scenario. Now let's talk about kind of as we progressively move the other way. What if now you don't just invest $100 a month and you keep increasing the amount of dollars that you put in? Because now if you're having inflation, you would hope that your salary is going up as well, which would mean that you should also inflate how much money you're putting towards your investments. Now, assuming you get a general return, now your investment value grows as well. And inflation disproportionately benefits the wealthy class. How? Because it disproportionately benefits the investor class. So when you're investing your money, you are now becoming part of that investor class. You own the investments that benefit from inflation. How does that work? Because when inflation happens, the value of the dollar goes down, causing the price of things to go up. So when the price of things go up, companies sell things for a higher price. When you invest your money, you're investing your money into companies that are now selling things for a higher price. So when you're investing your money, you are getting the benefit of inflation over the long term. Now, in the short term, of course, you can have swings where inflation happens and it hurts assets and this and that. But over the long term, you want to be one of the producers, one of the owners of the means of production. How do you do that? By investing your money. And so, you're worried about inflation. That's great. You should be worried about inflation, but that's more reasons to be investing, not reasons to not be investing.
So say I got the physical health, the mental health right, and I'm working. What are kind of the first steps that I need to go on to start building this wealth?
Well, so you got the mindset, the first part. Now it's about just putting it in action. Mm-hmm. And now you can follow something like the 75-15-10 plan, which will now create a system that no matter how much money you make, you're always putting some money aside to invest, always putting some money aside to save, because now you're paying yourself before you go out and make everybody else around you rich. So what does this mean? For every dollar that you earn, 75 cents is the maximum that you can spend. 15 cents is the minimum that you're investing. 10 cents is the minimum that you're saving. Mm-hmm. And you're going to keep this up forever. The only change that you will make is once you hit your savings goal, like once you have your 3 to 12 months worth of savings put aside for your savings emergency fund. You don't want to just keep saving your money to save it because, like you said, inflation is there eating away at the value of your savings. Mm-hmm. So once you hit your savings goal, instead of saving more money, you take that extra 10% and you put it towards your investments. Now it's 75-25, meaning you're not spending more than 75% of every dollar that you earn, and you're investing a minimum of 25 cents of every dollar that you earn. And you keep this up year after year after year, your investments will start earning you more money year after year after year. And eventually, if you stick with it, your income from your investments will eclipse. It will pass the income that you're making from your job. And now you have much more financial freedom because you have the earned income, which is from your job. And then you have the passive income, the more of the investment income, which is from your assets, your investments. And that's what allows you to be free. And now you can do more of the things that you wanted. But it all starts first with the mindset and the putting in the work to increase the amount of dollars you're putting in towards your investments.
What are some really easy ways that people can invest? So like what can they invest in right now?
If you want to talk about easy ways, you want to be more of a passive investor. So if you don't want to put in the time, effort, and research to research individual companies, use an app that allows you to passively invest your money. I talk about this a lot. That's what I use. I have some links in this description where I talk about some of the apps that I use. Some of them are affiliates of Minority Mindset. So we do get compensated if you use them, but you don't have to use them to do your own research. But essentially, the way it works now is, let's just say you want to passively invest your money into the stock market. Well, every week for me, I have cash that leaves my checking account and is automatically invested every week, whether the market's up or down, into a number of different ETFs. An ETF is an exchange-traded fund, means it's a basket, a group of companies. So I have some ETFs that give me exposure to the biggest 500 companies on the stock market, some ETFs that give me exposure to dividends, some ETFs that give me exposure to emerging markets, some ETFs that give me exposure to innovation technology companies. And now every week, it does not matter what's happening in the markets. This is completely automatic. It's passive and it's consistent. You do this week after week, year after year, and you will slowly be able to build wealth through that because you're adding more dollars to it and you're letting your dollars grow. So it's a very simple, passive way to do it. Is it easy? No. It requires dedication and discipline, and it requires you to live below your means now because some of your money is going to be invested instead of being spent. But it gives you that opportunity now to start investing your money, to start building that wealth. And that, I would say, is probably the most accessible way to start. Now, there's also ways to do this in real estate now, where you don't have to go out and buy a property. You can invest your money to crowdfunded real estate passively, where it happens monthly, just like this. But the stock market is probably the most time-tested way to do it.
Absolutely. I feel like every single time I sit down at this table, my eyes are just open to all this stuff.
We're always learning, and that's the beauty of YouTube. You can learn, and it doesn't cost you tens of thousands of dollars to start learning. Well, I appreciate your time. Thank you for the questions, Nate. If you want to see more of Nate, check him out at his channel, If you haven't joined Market Briefs yet, my free financial newsletter, I'll put the link for you down in the description. Thank you for watching, and as always, keep hustling. Inflation needs to come down, right? I think we can all agree to that. The Federal Reserve Bank says that they want inflation to come down. They want inflation to come down to 2%. Well, how do you do that? You need the price of things to stop going up or go down. And so one of the things that they say is they want to cool the housing market.